Guys, we have 3 AI stocks that are being overlooked by investors with the potential for multi-bagger returns. The first one, Teradyne. Now, first, whenever I hear Teradyne, I think about Aerotine Industries, the company in The Wolf of Wall Street that he's selling at his first job at Investors First. But either way, Teradyne is like the ultimate robot tester for technology. Their machines act as super smart inspectors, checking if everything works perfectly before these products hit the market. They also build robots for factories that help with tasks like carrying heavy loads or assembling parts. All this helps Teradyne ensure that technology is reliable and factories run smooth. Now, AI is at the heart of how Teradyne works and makes money. For their testing machines, AI acts like a genius puzzle solver, quickly finding mistakes in computer chips or electronics by learning patterns and spotting tiny errors humans might miss. These machines collect massive amounts of data, and AI sifts through it to find trends or warn when something might fail, so companies can actually go in and fix the issues before they become a major problem. Now, for their robots, AI is like the brain that helps them learn and adapt. In factories, Teradyne's robots use AI to understand their surroundings, figuring out how to grab parts, move efficiently, or avoid obstacles. Instead of programming every move, AI allows these robots to learn new tasks quickly by observing and practicing. AI also makes the entire process smarter by predicting when machines or robots might need repairs, preventing costly downtime. It constantly analyzes performance, suggesting ways to make everything faster, more reliable, and energy efficient. Now, here are some things on Teradyne as a stock. Let's check this out right now. Well, first off, it's exactly basically a $20 billion stock with a great balance sheet. Because look at this. Enterprise value is essentially $20 billion. So when you have market cap and enterprise value the same, it essentially means the net debt between is about the same, is zero. They've got a great 5-year return on invested capital of 19%. Now, the issue is we got 39 PE and a 44 price to free cash flow. Now, guys, if this is a company with massive growth potential, these might be cheap. I mean, look at NVIDIA, for example. When NVIDIA was $100 a share before the split, so $10 a share today, they probably looked a little expensive. Who would have seen this AI burst? Not many, but those who stuck with the company saying this company can generate a lot of profit have been rewarded appropriately. I'm not saying this is the next NVIDIA, but I think these are companies that are being overlooked. Let's go check out the story on the 8 pillars. Wow, I'm actually surprised by this. 5 X's, 3 checks. Revenue is actually down over the last 5 years. Net income is down. Free cash flow is down. All right, so I'm immediately going, I don't know about this one. So we have declining revenue, declining profit, and declining free cash flow with really high price to free cash flow and PE. Okay, I'm a little apprehensive about that. How do you have a premium being paid for a company that's declining in revenue and profit? I'm not saying it's fully declining, but let's go check out the financials to see exactly what's going on. I'm going to pull up quarterly. All right, so this last quarter, $737 million in revenue versus $703. But look, versus $827 2 quarters ago. So it fell, but maybe that might be rebounding now. Because look, 730 last quarter versus 684, 600 versus 617. So maybe they're back on the upswing here. So even though in the last 5 years, the revenue and profit and free cash flow might be down, they might be back on the upswing right now. Let's go see what analysts are saying about this. Oh, wow. Look at this, guys. Major upside according to analysts. $3.20 per share in earnings in 2024, $8.36 in 2028. Almost tripling. 2.5 times, if not more, earnings per share. And revenue growth, pretty solid. $2.8 billion to $4.7 billion. All right, not bad. Big jumps in the next 2 years, and then a little bit slower. So, guys, we're looking at this thinking, all right, the story might be okay. The potential for these robots is incredible. The question is, can they implement? So let's see our stock analyzer tool. So, guys, here are the assumptions I made for Teradyne. I did 3%, 6%, and 9% revenue growth because I'm looking out 10 years. For profit margin, I did 17, 19, and 21, the same for free cash flow. Now, if you look at the free cash flow, over the last 10 years, they've actually had more free cash flow than profit, but in the recent 5 years, they have not. I'm hoping that stabilizes, so I gave them the exact same numbers there. Now for PE, 10-year ROIC of 15.5, 5-year of 19%. So it's a premium company. High ROIC deserves a premium. So I did 14, 18, and 22 times earnings and free cash flow. And then guys, I did a 9% desired return. Now, you shouldn't put in 9%. 9% is the market, 9 or 10% is the market. If you're buying an individual company, you got to put a higher amount. That would give you your margin of safety. But I put it in here to kind of give me my intrinsic value. What's this company worth according to this? So I hit the analyze button. The stock's currently at 120. Yeah, 42 on the low side, 108 on the high side, 68 in the middle. So unless you think my assumptions are completely off on the low side, it still feels expensive based on what I've assumed here for the future. Stock number 2, Tempus AI Inc. It actually has the name AI in there. They have experienced significant growth, with revenue increasing by approximately 30% annually over the last few years. Analysts project that Tempus will achieve annual revenues exceeding $400 million by 2025, driven by its expanding partnerships in both healthcare and pharmaceutical. Tempus has built one of the largest collections of healthcare data in the world, processing over 50 petabytes of medical information. Guys, to let you know how much that is, there are over 1,000 terabytes in 1 petabyte of information. It's 2 to the 50th power. This is an insane amount of data. Tempus collaborates with well over 50% of the top global pharmaceutical companies to accelerate drug discovery and clinical trials. They've helped reduce the time it takes to identify eligible trial participants by up to 50%, making drug development faster and more cost-effective. Now, guys, my father owns a clinical research business. And I hear this and I think, oh my gosh, how much better will it be for us in the future to be able to develop drugs that much faster? And guys, 50% faster is insane. We're usually looking for 5, 10% growth rates to make things a little bit more efficient every year or two. All right, now Tempus AI Inc. has a $7.55 billion market cap versus $8 billion enterprise value. Now that's not a lot, but I want to keep in mind here, there's negative free cash flow here. It's a relatively new company going public, a lot of messed up numbers. Guys, to get into it really quick, and I like to be able to, it doesn't fit my criteria. I'm not looking for the hope and prayer on this. If you know a lot about this company, if you know a lot about the space, it's a different story for you. Don't just take what I'm saying and saying, well, if this guy says this, this must be true. I don't understand companies that have this. Now, could there be potential here? Yeah, maybe so, but it's looking like it's a little rich for what they're trying to figure out here. You really need to make sure you do a lot more analysis on this. If you're in our community, and this is a company that's interesting to you, please start a conversation about it, because this is exactly the reason why we have this community built. It's really important that you're able to sit down with like-minded people and understand this company. Now, if you're not part of the community, but you've thought about it, you may have noticed that we have a waiting list on everythingmoney.com. Today's software includes all of these tools in addition to the community. These tools cover stocks, retirement, and real estate. But behind the scenes, we're making a lot of great changes. So that offer is going to be gone real soon. Now, if you've been with us since the beginning, I built this software for myself and my team so we could use it to continually help us make great investments in stocks and real estate and make the right decisions for my future self. But as we've grown, it has to become less about me and more about how I can better serve you and the community members. And this is why we update our software continuously to give you exactly what you need. Now, the good news is the changes haven't been made yet. So if you join today, you'll be grandfathered in for life with all of these tools included. None of them will be taken away from you. And you'll be locked into your pricing tier forever. Now, I'm telling you this now because there's still time for you to sign up. So as long as you join the EM community before we make these changes, you keep everything. So click on the link in the description below to get access to everything we have to offer, including all the investing tools and the community. And I assure you, it'll be one of the best decisions you've made all year. Now, guys, stock analyzer tool on a company like this, I think it's just a little too difficult. This is not the kind of company to use stock analyzer tool on for myself. For you, if you see that path to profitability, more power to you. But I think focusing on the price to sales ratio and saying, listen, As this company grows, what's the price to sales ratio going to be? And what does it make that market cap? But don't forget dilution. I always worry about dilution of companies. Are they issuing more and more shares as time goes on? In this situation so far, they've only been around for a year and they've decreased their shares outstanding by 0.5%, but if their cash flow continues to be negative, there's only two ways in which you fund losses. Equity, by issuing more shares, or debt. So you've got to remember that when factoring this into the company's future. Our third AI hidden company, EPAM Systems. Now, guys, this isn't just another tech company. It's a powerhouse that's driving digital innovation across industries. From building cutting-edge websites and apps to offering expert consulting, EPAM is transforming how businesses operate worldwide. They're already working with some of the biggest names in healthcare, finance, and telecom, including over 50% of the top global pharmaceutical firms, speeding up drug discovery and revolutionizing the healthcare sector. In 2024, they were hailed as a leader in data modernization by the IDC, proving their relentless commitments to staying at the forefront of tech innovation. And to expand on that, EPAM launched StatGPT 2.0, a game-changing AI platform in collaboration with the IMF, making global economic data more accessible than ever. With AI and digital transformation at its core, EPAM could very well be set up for explosive growth, continuing to shape the future of industries worldwide. So, look at this with EPAM. All-time high, November 5th, 2021. $7.25 per share, recent 52-week low of $169. Guys, colossal fall. $14 billion market cap, and the current stock price is $247. So essentially, this company at one point was a $40 billion market cap business on revenue of what's now $4.6 billion. That's a pretty hefty number. They generate cash flow, and I'm glad that their free cash flow is higher than their net income. Decent gross margin here of 31%. I'm kind of surprised it's that low, to be honest. And pretty good returns on capital. So this isn't just like other companies out there that are still trying to generate that cash flow. This company has it. And market cap $14.2 billion, enterprise value of $13 billion. That means they have way more cash on the books than they have debt. So this company is probably going to be around for a while as long as they keep building on their revenue and these margins. I'm actually really surprised about these gross margins being only 30%. So let's check out the 8 pillars here. Guys, we have 6 checks and 2 X's. And our 2 X's are on the famous valuation metrics. Now, I love the fact that the price of free cash flow is lower than the PE, which is indicative because of the fact that their free cash flow is greater. Not buying back a lot of shares. I'm okay with that. This company potentially still has growth potential. Let's see what the analyst estimates are. Earnings per share, all right, 40% growth, give or take, from $11 a share to $15.81 over the next 4 years. And revenue growth, not a whole lot, guys. $4.78 billion to $6.48. 11%, 10%, 3%, 8%. So the question is, does this company deserve a premium or not? I don't know, because I'm not really blown away by that growth. I'm not really blown away by its return on capital. So I don't know how much of a premium it deserves. 31% gross margin. Okay. All right. So it's really important we look at the stock analyzer tool here, and let's see if I've done EPAM in the past. So guys, these are the 10-year assumptions I made on EPAM Systems. I did 3, 6, and 9% revenue growth. I did profit margin of 9.5%, 10.25%, and 11%, just based on looking at history and the fact that free cash flow is higher. I went a little bit higher on them, but I should keep them the same, 10, 11, and 12%. PE, I did 14, 17, and 20, because yeah, this ROIC is above the market average of 9 or 10%, but it's not really like hitting me over the head saying, this is amazing. Now, I don't understand the company in full detail, so you might understand better and say, Paul, you're being too high, you're being too low. That's the benefit of having your own access to the software. You can make those decisions, and that's exactly why this software, this stock analyzer tool, is our most popular tool, used over 1 million times per year. And finally, our 9% desired return, the market average with no margin of safety. Hit the analyze button. All right, I got a low price of 113 to 120, high price of 260 to 280, middle price of 170 to 180. It's just a wait for me, guys. Guys, $7 for 7 days. Go check out our software. Thank you very much for your time.